Hi everyone, good morning. So we'll just start about today's news. So after snapping its two-day losing streak on Wednesday, Dallas Street entered July 2nd with an aggressive gap of momentum. So it has crossed 24,100 and Nifty sees a recovery because of the US-Iran de-escalation. So and there's a global technology sector discussion as well. So currently Nifty 50 is trading at 24,190. So it has crossed the psychological corridor of 24,100. Uh, So open near the strong 24,062 mark and immediately scaled past the crucial 24,100 milestone. So yesterday's close of 24,005 has transformed from a psychological resistance ceiling into hard intraday support baseline. So however, firm around 7750, and when we look at the Sensex, it's firmly around 77,000 to 211. So it has closed yesterday at 76,922, which was up by 0.58%. So Bank Nifty closed near 58,000 and it's currently trading at 58,199. So the daily charts reveal a powerful bullish engulfing candle pattern with the higher highs and higher lows. So the technical disc are targeting a clear path to 58,000 with eventual target pointing towards the 59,200 and 60,000 zone. So when we look at the FII and DII activities, massive domestic institutional buying support of 3,159.24 crore yesterday, which easily absorbed the FII outflow. So GIFT Nifty open value was at 24,183 and intraday premium was trading at a premium of 97 points plus relative to Nifty futures previous close of 24,092. So the gift city Gandhinagar featured signaled a massive capital re-entry on the Indian derivative desk prior to domestic pre-open matching. And when we look at the India VIX cool off, which confirms so lower VIX sellers indicate the option sellers are aggressively writing puts locking in premium collection. So India VIX slipped down minus 2.6% to settle at 13.24. So volatility compression allows institutional desk to build leverage on long portfolio without paying heavy defensive hedging cost. So US Iran Qatar diplomacy progresses. There is an indirect talks in Doha. Qatar have yielded significant positive progress. So both nations, yeah. So both nations have So both nations have agreed to establish a direct communication channel by Thursday to report and document any violations of initial memorandum of understanding. So Iran reiterated that there would be no direct negotiation with US envoys. However, the direct framework has successfully cooled Middle East escalations. So Strait of Hormuz restoration would be there is a seaborne crude transit through the Strait of Hormuz, which is handling nearly 20% of global oil before supply, before the recent conflict, which is rapidly returning to normal. So shipping freight insurance rates, which spiked up 400%, are beginning to decline. So there is a massive spatial pricing spread between landlocked premium crude and maritime Brent is rapidly deflating. So when we look at the crude oil price crash, Brent dropped below vital $72 threshold. So plumb for a third consecutive sessions, which is trading near $71 per barrel, down over 3% over the last 48 hours, hovering under pressure around $68 per barrel. So the easing of political blockades removes the war premium, which drains energy prices back down and providing major margin relief for Asian importing nations like India. So when we look at the COMEX gold, spot gold, it has extended its gain and it is trading near $4,000 per ounce after touching a 1 week high. So it is softer than expected. US jobs data has raised speculations about interest rate adjustments, promoting non-yielding billion to capture retail attention. So it is resting over 58.42 per troy ounce on the COMEX, attempting a recovery after hitting a 2026 low. So a massive global tech sell-off occurred overnight, primarily targeting semiconductor and hardware stocks. So Wall Street is panicking that the massive capital expenditure on AI infrastructure might be growing too fast without immediate monetization pathways. So S&P 500 fell 0.22% and the Nasdaq slipped 0.66% on the heavy chip liquidation. So when it comes to the precious metal bonds, it has extended its gain, trading near 4,110.90 per ounce after touching a 1 week high. So it is softer than expected US jobs data, which has raised speculations about interest rate adjustments, prompting non-yield billion to capture retail attention. So the silver rate is resting around $58.42 per troy, and troy on the comics, attempting a recovery after hitting its 2026 low. So when we look out the global tech route, AI infrastructure panic hits global chip makers. Massive global tech sell-off occurred overnight, so primarily targeting semiconductor and hardware stocks. So Wall Street is panicking that the massive capital expenditure on AI infrastructure might be growing too fast without immediate monetization pathways. So S&P 500 fell 0.22 and the Nasdaq slipped 0.66 on heavy liquidation. So the Asian market collapsed. So South Korea COPSI leads regional sell-off. It crashed by an astounding 6.67% in early morning trade. It's dragged down by heavy foreign institutional selling in high cap tech names. So when it comes to Nikkei 2025, Japanese equities fell minus 2.23%. extending their losses as US semiconductor weakness spilled over. So what does it contrast with India is while the rest of Asia is bleeding red, Indian benchmark are displaying remarkable defensive insulation driven by domestic consumption. So we'll now just look at the Asia's largest IPO of 2026 debut. So the China resource, so the China resource new energy wind and solar developer raised a spectacular 24.5 billion yuan, which is around $3.61 billion in the largest Asian IPO of 2026. So it opened at 21.60 yuan, more than doubling its IPO price of 10.11 yuan and triggering temporary trading halts after soaring 198% in early trading. So if we had to focus on particular stocks according to NBCC India, so NBCC has signed a memorandum of understanding to construct a new Andhra Pradesh Bhavan in New Delhi. So it placed a total cost of 105 crore. It placed a total cost of 105 crore, and the technical outlook of that particular stock is the stock is exhibiting strong delivery based accumulation trading above key short term exponential moving average. I'll just show the particular stock here. So, as per the news, they have signed a memorandum of understanding to construct a new Andhra Pradesh Bhavan in New Delhi. So, it placed a total cost of 105 crore. So, the stock is exhibiting a strong delivery based accumulation, trading above key short term exponential momentum average. And when we look at this level, we see there is a resistance level and trend line. So, we can wait for the price to close above this level and look for long as there's a positive news particularly on this stock. So this is one of the stock to look at. And if we look at today's index support resistance level, we can see that the price exactly opened at a particular support level and it has closed above this support level, targeting the next resistance level. So we could also see there is a possibility of break for this resistance level as well. So once it break, you can look for a retest or a look for a retest here, and you can look for buying as we saw there is a huge FIA and DII buying pressure, DII buying pressure which absorbed FIA. So also when it comes to Brent crude, which is below vital $72 threshold. So Brent crude plummeted up for a third consecutive session, trading near $71 per barrel, which was down over 3% over the last 48 hours. So however, crude is under pressure around the $68 per barrel, and so we need to have a proper analysis on that before going for a trade. So if we look at the SGM premature redemption, so RBI sets 14,086 per gram redemption rate. So the Reserve Bank of India has officially declared the premature redemption price for SGB 2018-19 series 5 at historic 14,086 per unit, which is effective from July 1st, 2026, that is yesterday. So originally issued at 3,069 per gram for online subscribers, the redemption price represents an astonishing 358.98% absolute capital gain. So it calculated by a strict 3-day trailing average of 999 purity physical gold published by Indian Bullion and Jewelers Association. So, if you look at the SEB tax implications and net yields, investors must note that premature redemptions are now fully taxable, even for original subscribers, from April 1st tax revisions. The, co- the coveted capital gains tax-free benefits is strictly restricted to original investors who hold their tranches for the full 8-year maturity period. So any SCBs acquired through secondary exchange desk are ineligible for tax exempt status regardless of holding length. So prompting a large family offices to hold physical reserves instead. So if you look at the price surge on new age technology, Reliance Power's share price surged over 18% from its previous close of 24.84 to test level of 28.35 to 29.40. The country registered a spectacular 5.93 volume spike on BSE, showing heavy retail and high net worth individual accumulation. So the company informed exchange that it has to formally alter the business scope of its subsidiaries and to venture into artificial intelligence and high performance computing framework. So if you look at the Reliance AI Green Power subsidiary map, it has started renaming entities to capture the tech infra wave. So as part of tech infrastructure, key operating subsidiaries are being systematically rebranded. So the core subsidiary has been renamed Reliance AI Green Power Private Limited, aiming to integrate sustainable energy generation with computer data center networks. So the tech pivot comes directly after the company's Q4 financial updates, where it outlined enabling plans for a massive 9,000 crore fundraise to aggressively clean up balance sheet leverage. So if you look at the Goldman Sachs 60 billion rupee forecast, RBI forex measures triggering global capital inflow. So the Goldman Sachs has upgraded its structural outlook on Indian rupee, projecting 60 billion of foreign inflows across current year 2026. So the RBI catalyst has, that it is driven by aggressive reserve bank measures, including fully subsidizing hedging cost for bank rising deposits and concessional FX swaps for state-owned enterprises. So if you look at the FII participation, it is retroactive removal of capital gains taxes on government securities for foreign investors, which is drawing massive sovereign wealth allocations. So when we look at the narrowing current account deficit to 1.1%, due to declining international crude oil averages and rigid import restriction on gold, Goldman Sachs has narrowed India's current account deficit forecast to 1.1% of GDP. So the structural balance of payment support is expected to pull USD INR back towards the 94 mark in the near term. So despite short-term currency strength, domestic bond yields are forecasted to march higher, pushing the benchmark 10-year yield towards the 7.30% mark. So when we look at the South Korea's Kospi circuit breaker, South Korea Kospi led an intense Asian market sell-off, plunging 5.36% in earlier minutes of the session. So the extreme downside momentum forced the Korean exchange to initiate a temporary 5-minute trading halt to cool options driven institutional liquidation. So it was driven entirely by foreign portfolio investors taking massive profits in Korean consumer technology and hardware blocks to cover global redemption bills. So when we look at the FII cash liquidation ledger, we can see there is the unpacking the multi-month 2.9 lakh crore outflow. So the provisional exchange data reveals that the foreign portfolio investors dumped the 49,028.63 crore in cash equities in June 2026. So if you look at the historical outlook, as did the following relentless FII selling of 55,963 crore in May and 70,135 crore in April and 1,22,540 crore in March. Yesterday's DII net purchase of 3,159.24 crore, highlighting how domestic mutual funds are serving as the sole structured person holding Nifty above 24,000. So if you look at the Hyundai motor supply chain fire recovery, we can see that there is a Hyundai Motor India reported total monthly sales of 51,335 units for June 2026. And the volume was achieved despite facing a massive production loss of 13,900 units, which was caused by a major fire incident at one of the prime component suppliers. So when we look at the operational management, the management confirmed that the production has returned to 100% capacity across all facilities after successfully sourcing alternative compounds. So if you look at the Wall Street semiconductor profit taking, S&P futures fell 0.22% and the Nasdaq Composite fell 0.66% overnight as institutional desks locked in profits on chip makers. So when we look at the year-to-date perspective, despite the cooling, the sector has seen historical gains in 1R 2026 with Micron trading up plus 260% and SanDisk up an astonishing plus 750% year-to-date perspective. And when we look at the jobs horizon, Wall Street is trading cautiously as it waits June non-farm payroll data, with economists projecting a modest addition of 1 lakh 50,000 jobs. So, if we look at the high conviction calls on auto and the power sector, Maruti Suzuki India, which has recently gone through a PV expansion, Globe Capital maintains a high conviction buy on Maruti Suzuki, targeting 15,250 with a strict defensive stop loss placed 14,000. So, if we look at the particular stock technicals, yeah, price has exactly reacted to this support level. So, and as we saw that the Globe Capital maintains a high conviction buy on Maruti Suzuki, targeting a 15,250, which is around here 15,250, and with a strict defensive stop loss placed under 14,000. So we can see a strong resistance level near this support level. So they have placed a stop loss near 14,000 and targeting 15,250. So and if you look at the technicals, it obviously supports. As we saw, if we see the second indicator matrix, we see all the indicators, all the time frames showing a bullish time frame, bullish structure. And if you look at the technical chart, we could see a strong rejection in the support level. So we can wait for a candlestick pattern like breaking this candle high or this candle high, then we can look for a long. So if you look at the Adani Power, Kotak Securities sees a structural breakout in bar space, recommends entering Adani Power for a target of 238. So they see a structural breakout in bar space. So we see that there is again a rejection in a support level. So we'll just switch another time frame to see whether we get the breakout kind of thing. So we see a breakout at 228, or maybe you can look for the candle to close above this level 226. So once you get that level, you can see for a no. So German auto industry technically set up target a price of 138 to 142 as heavy commercial vehicles orders picks up. So if you look at high conviction calls in renewables and real estate, Suzlon Energy. So if we look at this particular stock here, Suzlon, a technical desk side massive volume driven structural strength. So S&P stock market recommends buying Suzlon for targets of 65 and 70, and stop loss should be placed at 53. So if we look at this particular stock, we could see there was a strong support. The price took a strong support and gave us a strong bullish engulfing candle. So this would be a proper entry state. So this would be a proper entry area. We can look for entry here. You can either directly enter or look for a retest over this area. So before that, proper your risk properly. Don't just enter blindly. So if you look at the DLF limited uh, premiumization, so it has capitalizing on premium residential launches. Globe capital targets of rupees 680 on DLF with stop loss or 625. So focus on capital strictly on sector leaders exhibiting relative strength on flat Nifty sessions. So JP Morgan New India chief Rahul Bharadwaj, formerly HSBC, has formally assumed charge as the senior country officer for JP Morgan India, signaling a major transition of institutional banking desk. So Kotak Securities highlights highly constructive long accumulation pattern of the stock, targeting the upside of 1420, stop loss of 1350. So it has accumulated a large private bank for prepare for post expiry index rebalancing flow. So, quick summary of this would be the domestic open captured the index recovery with Nifty trading at 24,127 and Sensex hovering near the 77,050 level. It's the Nifty is currently trading at 2411 and Sensex is currently trading at 77,393. So the US Iran quarter Qatar progress is like that's documented the successful conclusion of indirect Doha talks and establishment of communication channel today. So crude collapse showcased the fall of Brent crude forward $71 per barrel as the Hormuz shipping bottlenecks clear. So there is a with regards to IPO momentum, it has evaluated the massive shares on IPO debut of China Resource New Energy, tripling up plus 198%, and it mapped out latest developments for Alchem Labs and IPCC India. So we'll also look at index update and open interest on option chain analysis. So we'll be doing that at 10:30. So one of the viewer has asked about can I know the view on Coal India stock for 1 to 10 days horizon? Just yeah. So we can see here there is a strong trend line break in a 1 hour time frame. So there is a possibility of for this particular stock to go up. So we can see that the current price is retesting near this trend line level. So for purely positional traders, you can look for long positions. You can even use strategies, positional strategies, like you can buy futures and you can buy a put option to hedge it. So holding period would be 1 to 10 days. So you can expect a profit ranging from 5 to 10%, which would be around 2 to 5K. So this would be the analysis on Coal India. So you can expect a long position from here. Just wait for a perfect candlestick patterns. If we look at 15 minutes time frame, you can look for this resistance to regain. So once the price closes above this level, you'll have a strong confirmation to go long. Hope you got a clear view on Coal India stock. Let me know in the comments. Let me know if you have any particular stock to analyze. Drop your favorite stock in the comments. Hope the viewer got a clear view on the on this particular stock, Coal India. The bias that we got is bullish. We saw a tap in on demand zone here. So just wait for a confirmation closing above this 15 minutes candle or above this resistance level, so that there will be a proper confirmation and you can look for long positions. So you can use positional strategies like buying a futures and buying a put option. So you can minimize, you can reduce loss by using these strategies. So I can also show you a chart if you don't know how to use a strategy. So yeah, I'll be now talking about the index analysis and option chain analysis. So if you're tuning in right now, drop a one in live chat if my audio is running clean and tell me where are you trading from today. So today is Thursday and we are smack in the middle of a high stakes weekly expiry session. So Nifty is currently trading at 24,111. So now on a standard day, a 10-point drift looks like a noise, but today is expiry. Gamma risk is running hot. Premium decay is accelerating by the minute, and market makers are actively laying traps on both side of the chain. So if you want to survive the next 2 hours without getting wiped out by a sudden gamma squeeze, you need to understand the structural war happening on this chart. So smash that like button, subscribe if you are new, and let's get right into the trenches. So if we look at the 24,100, the strike is currently at the money pivot. So look at the sheer volume of contracts being stacked here. So the call side, we have absolute monster of a red column here showing a massive diagonal striped increase block representing over 1.1 crore cumulative call contracts. So market makers are aggressively writing the 24,100 call, trying to establish a firm ceiling and prevent the bulls from running away with the tail. So, but look at the counter attack. Put writers are not backing down. We have a solid green tower with prominent diagonal increased stripes, representing nearly 80 lakh put contracts written today. So, what does this tell us is 24,100 24,100 strike is massive high velocity battleground. Put traders are defending the strike to keep the index above 24,100, while call traders are building a fortress to block any uptrend progression. So we will just mark the 24,100. So on the expiry morning, when you see both towers exceeding 80 lakhs to 1 crore contracts at the active ATM strike, it means straddle sellers are dominating. They are trying to pin the index right here to bleed both call and put buyers dry of their time value. So if you look at the 24,000, so this is the smart money which has laid down their config. So looking lower down the chain, because this is where the real institution smart money has put their money. So if you look at the 24,000 strike, it is the look at the green tower. So it is the single largest column on the entire board, towering at over 1.45 crore put contracts. And more importantly, look at the call side of 24,000 strike. It has around 93.35 lakh. So if you see that hollow white top block on the red call bar, that is an the call over has changed to 67.45 lakhs open interest, and put over has increased by 93.70 lakh put interest. So call writers who are shorting 24,000 strike yesterday are panicking, covering their positions today, because Nifty has scaled and sustained about 24,100. So the short covering at 24,000 strike is a massive structural signal. So 24,000 is now the absolute bedrock floor for today's weekly expiry. The Bears have completely abandoned their defensive positions at 24,000, conceding that strike entirely to the Bulls. So if Nifty dips down towards 24,020 and 24,040, institutional buy orders will trigger instantly because of the massive put concentrations. So if you are holding put options expecting a deep market crash today, I am telling you right now, you are fighting a losing battle against a 1.3 crore contract wall. So if you look at the overhead roadblocks and volatility ceiling, uh, let's say if it's about the upside, if bulls manage to clear the 24,100 barrier, which is over here, so where does the momentum exhaust? So look at 24,150. All writers have built a solid intermediate outpost here, holding nearly 61 lakhs contract. So there is almost zero put writing to support this level, making it highly inactive, active intraday resistance band. So if looking at 24,200, this is the secondary institutional roof. So the red call tower is holding nearly 1 crore contract, which is around 93.53 lakhs. So with a massive intraday increase strikes, and look way out at 24,500, a massive outlier wall holding over 90 lakh contract to absorb any extreme tail risk. The option layout gives us structural boundaries. We have hard concrete floor at 24,000, a major battleground at 2400, and a primary overhead ceiling at 24,200. So this means Nifty is effectively locked in a tight 200 point range, 24,000 to 24,200. 24,200 as an option buyer. Trading inside this range means your premium is decaying by the second. So if we look at this levels, we can see the price has reacted to this 24,100 resistance level. So 24,150 is it's better than targeting 24,200. So if price hold above this level, so if price hold is above this level, there is a chance of price to reach 24,200. So you can expect these as a strong resistance zone. We also have a strong supply levels here. So this means Nifty is effectively locked in a tight 200 point range. So we look for the scenarios for today. The scenarios that we can have is 24,100 squeeze play, which is for bullish strategy. So watch the 24,100 call tower. So Nifty spots prints about 24,125. So it's currently here. So just or wait for this price to close above this candle. then you can look for the price to move till 24,200. So those 1.1 crore call writers will begin to panic. So if we see the call OI at 24,100 start to deflate, by ATM 24,100 calls. So our rapid gamma squeeze will kick in, mechanically pushing Nifty towards the next major wall at 24,180 to 24,200. So the second scenario would be the support rebound. A midday dip pushes the index down towards 2430 to 2450 zone, which we have exactly marked here. We started this in the morning session itself. So do not short the market here. Instead, wait for a bullish rejection candle, like a hammer or engulfing. So on your 5 minute chart, go long using calls or right out of the many put options. So these would be the two scenarios for Nifty index using all option analysis. So there are three rules to keep in your mind before taking any trades. Never average a losing option trade on expiry day. So theta decay is non-linear today. An option contract trading rupees 10 can go to zero in minutes. So this would be rule one. Remember before you take any trade. So respect the open interest hours. This would be the rule. So if you look at the open interest towers, the data shown here is absolute blueprint of where institutional money is parked. So don't trade against the trend of the big towers. So keep your position size limited. Expiry day carry extreme gamma acceleration. Trade with only half of your standard capital allocation. So keep these three rules in your mind. So this would be the analysis on index Nifty index using the option chain analysis. We saw the OI charts. So we have analyzed using open interest hours. We understood where the institutional money is locked up. So where the trend is likely to go. So we have analyzed all this. So we'll be doing the same with the Bank Nifty and Sensex. So until then, let me know if you have any doubts related to this. Let me know your view on this. So we'll start the analysis on Bank Nifty within 5 minutes. We'll look to Bank Nifty OI charts in the same way as we did for Nifty. So we'll also get to know where the institutional money is parked. Don't use this OI chart alone. Align this with technical levels. So when we align multiple confluence, we'll get a strong trend confirmation. So now we are looking at a highly intriguing setup on the financial index. So while Nifty is battling its own localized weekly expiry dynamics, the Bank Nifty is operating on a completely different plane. So let's look at the spot ticker. We are currently hovering around 58,099. So posting a mild intraday gain of 0.12%. So now if you are looking at simple 5 minute candle stick chart, this market looks currently it looks completely flat. It is currently trading near the open price itself. So we have a strong trend line support over here. So if you want to understand where the smart money is positioned, their risk for this July month series, you need to look at the structural distribution on this board. So before that, smash the like button, subscribe if you haven't, and let's dissect this layout strike by strike. So now we'll just look at the open interest chart. So if we look at the 58,000 strike on your screen, this is where the current price is trading. So our spot price is resting at 58,009,103, which makes the 58,000 level the absolute psychological mathematical anchor for the index. So the concentration of contracts written here is nothing short of spectacular. So we have a massive towering green bar standing at nearly 11.7 lakh cumulative put contracts. So this represents firm commitments of capital trying to assert the 58,000, which will act as the bedrock flow for the initial leg of this July series. So if you look immediately to its right, the red call column is even larger, covering at over 12.2 lakh contracts. So when you see both put and call towers exceeding 11 and 12 lakh contracts at a single strike, you are looking at the classic high conviction straddle zone. So we can see that the calls OI stand at 10.37 lakhs and put OI stand at 2.68 lakhs. So professional proprietor desks are aggressively writing both the 58,000 call and 58,000 put, where calls are dominating. So they want to pin the Bank Nifty right here. They are betting that the index will drift sideways, allowing them to melt down the premium on both sides of the contracts. So as long as the spot remains within a narrow band of 58,000 plus or minus 150 points, the straddle sellers are printing money while retail option buyers get slowly uh, bleed dry by it. So there are absolute liquidity deserts. The open interest change across these strikes is almost negotiable, barely registering on the chart. So why is this structural detail incredibly dangerous? Is it means we have an extreme liquidity vacuum on both sides of 58,000 pivot. So if you look at the downside support, if the bulls fails to defend 58,000 mark and we slip below 57,900, there is no option-based question to catch the index. The next notable put concentration doesn't appear until 57,500. We can see there is no strong support. Holding a moderate contracts around 4.1 lakhs. So with the ultimate bedrock support resting way down at 57 lakhs, 57,000. So it should be holding around 5.5 lakh put contracts. So similarly, if the spot breaks above 58,150, there is a wide space open. The next major roadblock for the bulls is at 58,500, which where the put is holding nearly around 63,000. So if the index gets pushed out of 58,000 straddle zone, the movement will not be slow. It will be high velocity, unchecked slide or surge through these empty strikes because there are no option-based speed bumps to slow down the moment. So if you look at the absolute giant standing at 59,000, the red call tower is towering nearly 6.52 lakhs contracts. This is a massive concrete wall built by the institutional market makers. So the sellers have positioned the heaviest force at 59,000, establishing it as the absolute ceiling for the initial weeks of this July monthly contract cycle. So even if the bulls manage to clear 58,200 and march past 58,500, the momentum will face extremely near resistance as it approaches 59,000. So we have our structural boundaries mapped out cleanly by the smart money. So it is a primary battleground at 58,000 and a secondary overhead roadblock at 58,500 and a rigid institutional ceiling at 59,000. So if we look at the actionable midday execution scenarios, the scenario A would be a 58,000 breakdown play. So we currently see the price is trading above 58,000. So we told that the price was trading near this resistance trend line zone. So it has closed and retesting this trend line zone. So since there is a heavy contract, crypto writers have dominantly written down the 58,000 level. So it's high likely that it will break this level. So wait for the candlestick pattern and close above these levels. So once you get this would be a strong confirmation. So the second scenario would be resistance rebound play. So a swift momentum driven midday spike pushes the index towards 58, 450 or 500 zone. Do not chase the breakout here. Instead, wait for the spot to hit the 58, 500 call wall and show signs of rejections. Sell out of money calls and buy puts. So this would be a pullback to the 5800, 58,000 straddle pivot would be the target. So keep a strict stop loss placed below the 58,580. So always remember three rules. Never short change the 58,000 straddle unless a breakout is confirmed. So do not try to predict which way the index will break. Let the price print clearly outside the 57, 950 and 58, 150 range before committing a directional capital. So respect the liquidity desert. So when trading inside the vacuum strikes, slippage will be high. Use limit orders rather than the market orders to avoid getting filled at unfavorable price. So keep your position sizes light. Remember, this is the July monthly contract cycle with 26 days left to expiry. The time value is high, which means premium will decay slowly if the market stays pinned. Do not block full capital in range bound trying. So these will be the analysis on Bank Nifty index and its open interest option chain analysis. So let me know in the comments what's your view on this. So we'll also start analyzing Sensex and its option chain. So until then, we'll be back in another 5 or 10 minutes. Until then, let me know in the comments regarding your position in the index and regarding the view on the both of these index. And if you have any favorite stock to be analyzed for this particular day, we'll analyze it together. Put it in the comments. So we'll now start with the Sensex analysis. Sensex have also retested the trend line. So it's currently trading above this resistance level in 15 minutes time frame. Expect a retest over this level since 77,000 was a strong psychological zone. Yesterday it closed below this, but now it has strongly opened above this, showing 77,000 as a strong support. So you can expect a retest over in this area as well. So wait for a proper candlestick pattern before entering. So so if you open the Sensex, so the current PCR is at 0.95, which shows neutral to bearish, and max pain is at 77,200. So this is the zone where all the option people book profit. So this is the important zone to look for. But the overall PCR is at 1.0934, which shows bullish signs. So the current intraday bias shows a neutral to bearish, which shows around 0.958. Today is Sensex expiry. We know Thursday is Sensex expiry. So India is at 12.774, which is down by point 0.5. So this shows there is a the India VIX is cooling down, and there won't be no sudden spikes. So if we look at the strike price, we see 77,000, which has a big towering green bar, which has a put OI of around 96.22 lakhs and call OIs by 16.97 lakhs. So we can see a huge diversion here, and uh, we can see that there is a decrease in call OI. So there is a decrease in call OI around minus 3.57 lakhs, and put OI has increased by 81.68 lakhs. So the current strike price is trading near 77 200, and put OI is around 62.67 lakhs, and call OI is at 46.16 lakhs. So if you look at the immediate resistance level, we see 77,200. Price is currently trading at 77,200, and we see immediate resistance level at 77, 300, 400, and 500. We see strong resistance zones where we see call OI contracts totaling at 78.34 lakhs and put OI is totaling at 32.71 lakhs. So we see a massive difference here, and call OI has increased by 16.70 lakhs, and put OI has increased by 31.47 lakhs. So, and if you look at the 77,500 level, call OI has contracts totaling 96.55 lakhs, and put OI is totaling at 11.72 lakhs, where we again see a massive difference here. So these are the strong resistance zones for today to watch out. 300. So these are the immediate resistance level for Sensex. So have an eye on it. So the scenarios for Sensex would be look for a strong bounce in these levels, and once you see a 15 minutes or a 5 minutes candlestick close above this level, you can target this level. So 77 until and unless the price stays above 77,200, so you can look for long, because 77,200, as we saw, it was a max pain zone. So once the 400 level breaks, the 500 would be the exhaustion zone. We saw the 500 was heavily contracts are more in call OI, totaling around 96.55 lakhs. And we have a very less moderate put OI contracts around 11.72 lakhs, which has a 85 lakhs difference between call OI and put OI. So you can look for the break above this level and target around 77,500. 77,400 would be your first target, and 500 would be your second target. So this would be the analysis for Sensex and the option chain analysis.
Hi guys, welcome back again. So yeah, as you guys know, and at this time we'll be talking about the deep open interest data. So this is a data that tell us where big institutions, FIIs, and proprietary, so that are putting their money and which stocks are suddenly seeing an interest surge in interest. So everything I'm sharing today is based on the public NSE option or open interest data, and this data is just the interpretation for educational purpose only. This is not a buy or sell a recommendation here. So please do your own research. We are taking any data according to your own risk appetite. So we'll do a detailed recap of yesterday's market and also what open interest is and starting from the basics. So, because new viewers also will be joining, and every single top move stock by one, index level activity, which is like Nifty, Bank Nifty, Fin Nifty, Mid Cap Nifty, and the water sectors, the wise pattern is telling us. So let's just understand what happened in the market yesterday, because today's OI data is really an extension of the story. So yesterday Nifty 50 closed at 24,005.85 up to 140.10 points. That's 0.59% up. So the snapped a 2-day losing streak. Sensex closed at 76,922.64 up to 443.97 points, which is 0.58%. Bank Nifty closed at 58,033.05 up to 490 points, which is 0.85%. Banking was the strongest sector of the day yesterday. So intraday high of Sensex was 77,110. For Nifty, it was 24,049. So auto stocks saw strong buying because the June sales numbers came in strong. Mahindra, Maruti, Ashok Leyland all performed well yesterday, and FMCG also saw buying. Hindustan Unilever and Nestle India moved up on expectations of a strong June quarter earnings season. So the broader market was positive too. Nifty mid cap 100 was up for 0.34%, and Nifty small cap 100, up 100 0.36%. So on the Nifty 50, 33 stocks closed higher and 17 declined. Eternal Zomato was the top on the gainers list, up to 5.82%. So on the global front, crude oil has softened a bit, trading around $72 a barrel, which is good news for India since we import a huge amount of oil. And there has also been some progress in US-Iran diplomatic talks, which has eased the geopolitical tension. However, weakness in US tech stocks put pressure on India's IT name as well. So yeah, today is 2nd July. Based on the underlying value in the OI report, I'll be telling Nifty 24,087 and Bank Nifty 57,978, Fin Nifty 26,841, Mid Cap Nifty is 14,595. So this is tell us the index is roughly stable, slightly higher than the yesterday's close. So let's see what the OI data is telling us. Whatever the prices I have told now, these are the underlying value of the particular stocks and indexes which I told. So yeah, we'll talk about the open interest. As I'll be telling every day that whenever a trader buys or sells future or option contract and that contract hasn't been closed yet or not expired or not squared off, it counts as an open contract. So open interest is simply the total number of such open or outstanding contracts. And OI is not the same as volume. These are two different things. Volume is something how many contracts were added today, buying and selling combined. Open interest is something how many contracts are still open right now, not yet closed. So both are completely different. So if two different people are trade a brand new contract, one buys and one sells, and it's a fresh position for the both. So that OI increases. If someone close a old position, say someone who was long earlier is now selling to a square off, so that's a OI decrease. So now I'll go through the entire list top to bottom, so we don't miss any important movement here. Exceed exceed in open interest at 28,328 was 21,853 yesterday. Change of 6,475 plus 29.63%. The biggest jump on the entire list today, value of 79,572 contracts, total value over 81,904 lakhs. Stock price around 419 rupees, 419 rupees. This is a battery EV linked stock, we already know, and a jump to this large single is suggests a serial or a serious institutional interest. The second one is DMAT. We already spoke about the DMAT yesterday regarding the open interest. So it has it's currently at 33,470. It was 26,828 yesterday, and 24.76% jump. Consumption retail favorite. Total value is 49,366 lakh. Price is around 4,221. The next one is FinNifty. This is an index. Y is up 24.66%. Fresh activity in index options too. So meaning tradings are placing big directional bets on the financial service sectors now. And next one is SRF up to 16.29%, especially chemical stock. Total turnover is nearly 20,496 lakh rupees. Yeah, the next one is Nifty. A huge number here. OI at 74.89 lakhs contracts. So it was 16,5.71 lakhs. It has added 13%, 13.96% of interest, OI interest. So value of 2.28 crore contracts, total value of 15.5 lakh crore. That's lakh of crores, yeah, we know. And this shows that's a massive amount of fresh positions happening across the entire market with the traders taking a weight index level bets now. Yeah, the next one is L&T, infra, capex, bellwether. Y up to 11.77%. Value is 58,708 lakh. The capex theme is continuing to play out. And yeah, the next one is Motilal Oswal, financial service stock up by 11.10%. Bajaj Auto, it's up by 9.82%. Value is 29,769 lakh. Confirms the auto theme will play out yesterday's like two. Yeah, the next one is Naukri, up by 9.34%. KPI Tech, it's up by 9.19%. Mid cap auto tech or engineering stock, we decent value. Bosch is up by 7.57%. Delivery is up by 7.10%. Also, the Indian Bank is up by 6.67%. HDFC by 6.46%. Union Bank is 6.20%. Hyundai is 5.95%, which is auto. This is a recently listed stock in India, and it's already seeing a meaningful activity, which is Hyundai. Swiggy is up by 5.72%. So yeah, Union Bank, Bank of Baroda, Bank of India, Indian Bank, and the Bank Nifty index itself all showing strong OI build-up. So this directly connects to yesterday's Bank Nifty rally of all showing strong of Y build-up. So this, which is 0.85%. So when this many PSU banks are moving up in a Y together, it points to sector-wide like institutional interest, not just one-off moving a single stock. And Bajaj Auto, TVS Motor, and Motorcord, uh, Sona Comstar, Bosch, KPIT, Hyundai, Tata Motors, Ford Motors. That's a long list. It is a direct effect of a strong June sales numbers. And CC Power, Power India, NHPC, BHEL, Polycab, EI, and the CapEx cycle. This theme is clearly continuing benefits from the government's infrastructure push. And DMart, Marico, Tata Consumer, the consumption theme is also holding strong now. And yeah, not a single major IT stocks appears like among today's top movers. This confirms yesterday's trend that the IT sector remains weak and traders aren't building fresh positions there with much confidence. And Prestige Estates matched your yesterday's outperformance in the realty sector with 3.5%. So the overall message here is banking, auto, and capex infra teams are seeing the most fresh institutional confidence today, while IT is still sitting on the sidelines for now. So yeah, Exceed Industries. Now it's time for our stock of the day, and that's Exceed Industries. So the biggest percentage OI jump on the entire list is Exceed Industries, which is 29.63%. No other stocks comes close to this level. Solid value backing it up, which is 79,572 contracts traded. So this isn't some thin illiquid move. Large total value turnover over 81,904 lakh, and the option premium value within this meaningful too, which is 16,162 lakh. Meaning, option traders are also taking active directional bets, not just future traders. So the current price level is near around 419 rupees. Exceed is the battery energy storage business, and the EV transition theme is still very much alive in the India. So you should put your eye and keep the stocks in your radar. Check out this particular stocks for the day. And a big OI jump like this doesn't automatically like mean the stock will definitely go up. Large OI buildups can happen in either direction, long buildup or short buildup. So always read OI alongside price action and manage your risk accordingly. So the second is DMAT with the OI interest jump of 24.76%. This is the consumption retail theme and in the second strongest signal today. So OI data is a descriptive, backward-looking indicator. So not as just a predictive one. It tells you what's happening. It doesn't actually guarantee what will happen next. F&O trading is high risk, and especially if you are buying options premium, time decay works against you. So don't make big decisions based on your single day's OI data. Track the trend over 2 to 3 days, and position sizing up and stop loss discipline matters more than any single hot stock. So everything we have discussed today is just a snapshot of the day data. Combine it with your own trading strategy and risk capacity and research before acting on it. So actually, the market recovered yesterday. Nifty closed about 24,000 and Bank Nifty was the strongest sector. Today's OI data shows that the most broad-based fresh interest in the banking and auto sectors. The capex, power, infra theme, which is like BHEL, CG Power, Polycab is also like continuing, and IT sector remains weak both in yesterday's price action and today's OI buildup. So stock of the days are Exide Industries and standing out with an almost 30% of OI jump. So you should remember this. All of this data is like based on observation, non-financial advice. Manage your risk. So also Exceed, which is sitting on top of the OI list, OI jump list, which is option premium of 16,162.56 lakh. So, as I mentioned, it's sitting at right top of the both the list today. The biggest Y jump and the biggest options premium. That's a strong double confirmation of active interest. On the other hand, Hyundai and SBI Life has the latest option premium activity. Meaning today's Y increase, there is a more future demand on the options, right? Yeah, we'll talk about the global news which it's happened and circulating. So, as yeah, as a interim US-Iran framework agreement, which has been in effect since mid-June, which eased the months of disruption. Brent crude, which had spiked towards $80 plus a barrel during the conflict, has since cooled to around 72 dollars a barrel. So this is the biggest relief for India since we are a major oil importer, and low crude means low import bills, better inflation outlook, and less pressure on the rupees. So even though there is a ceasefire framework, tensions have flared briefly in between. Also, this crude spike back out above $80 on one point on the fresh warnings from the US side. Markets are watching this closely. At any escalation could quickly reverse the current calm in the oil prices. This is the first major US economic data release for Q3 2026, and it will set the tone for the US dollar index. A stronger than expected number could strengthen the dollar and pressure emerging market flows, including also India. So weaker number could support risk assets. So global technology stocks have been under pressure, and this directly hit Indian IT major yesterday, which is HCL, TCS, Tech Mahindra, Infosys, all fell yesterday. And if US tech weekends continues, expect Indian IT to remain the laggard session. Lecter again today. So there is an ongoing thread around US tariffs on Indian goods being linked to Indian reducing Russian oil imports. India has already scaled back Russian crude intake and redirecting more of the trade towards the China. This is a slow moving but important trade policy background story for the export linked sectors. So we'll talk about the FI and DI activity, which is actually mixed picture here. On 1st July yesterday, FII were net sellers, pulling out over 1,140 crore rupees from the cash market. But DI stepped in as a net buyers, putting it in about 3,159 crores, more than observing the FII selling. This is exactly why the market still goes higher despite foreign selling. Domestic money is pushing the market right now. And F&O side, FI were also net short on Nifty futures. But their options positioning heavy put buying alongside put shortening, looking more like protective hedging than aggressive bearish. So strong June wholesale retail numbers from Mahindra and Mahindra, also Maruti Suzuki and Ashok Leyland directly fueled yesterday auto yesterday, like it completely fueled yesterday's complete auto rally, and that's clearly spilling into today's OI build-up across Bajaj Auto, TVS Motor, Hero Motocorp, and also auto ancillaries. Broad-based OI jump build up across PSU banks, which are Union Bank, Bank of Baroda, Bank of India, and Indian Bank. Alongside the Bank Nifty index suggests the sector is benefiting from a combination of rate cycle expectations and also the strong credit growth. Worth watching RBI commentary closely this week. So also beyond the global tech sell-off, there is ongoing concern in India around slowing global tech spending and on uncertainty tied to AI-related capex. This is computing the pressure on IT services, which IT services companies, not just one day blip here. Also, the reality ledge gains yesterday, and FMCG names like Hindustan Unilever and Nestle rallied on optimism about the upcoming June quarter earning. So, which kicks off in the coming weeks. So we'll be putting it all together that globally cooling oil fragile ceasefire are supportive, but US dollar and tech sell-off are headwinds. At home in India, domestic institutions are doing the heavy lifting to support the market even as FIs stay cautious. And that's exactly why we are seeing banking, auto, capex, and sectors like these all sectors dominate yesterday as open interest build up, while IT stays under pressure. So let's just look up the five highest options premium, where the real options action, the premium money is concentrated. This is the options value, which is premium, and column from the sheet, ranked from the biggest to the smallest. The highest in this number, the more traders are paying to take directional bits via options rather than just plain futures. So I'll be telling. I was just telling the top four indices. Indexes. One is Nifty, which is 11 lakh 82,000, 102.52 lakh, highest by far. And Bank Nifty is 1 lakh 43,628.39 lakh, and mid cap Nifty is 6,759.47 lakh, and Fin Nifty is 328.92 lakh. So these are the top four indices which is having highest options premium. Also, I'll take the top four or top seven stocks. One is Exide India, which I already mentioned, 16,162.56 lakh, and MCX is 9,500.88 lakhs. OFSS is 8,063.67 lakh. TVS Motor is 6,924.07 lakh. Delivery of 6,691.77 lakh, and KPI Tech 5,387.48. LT, which is 5,277.66 lakh. These are the top stocks with their options premium. As I mentioned, Exide is sitting on the top of both the lists, which is one is OI jump and also the options premium. That's a strong double confirmation of the active interest for today. On the other hand, in the end, SBI Life has the least options. Yeah, Hyundai is having 159.28 lakh, and SBI Life is also having the 301.21 lakh. So these are the these both are sitting at in the bottom of a premium activity, and meaning today's Y increase, there is more futures driven, not just than options driven. So that's the update of Y for today. So we'll be back with the heat maps, and we'll be back with the stocks which are doing with the sectors which are doing good, outperformers and underperformers. Sectorial wise, we'll be updating. Be with us. Be in the session. We'll be back in 10 minutes. So as we discussed, we'll be talking about the outperformers and underperformers. So yeah, the first one who's outperforming is one is Nifty IT with 4.49%, which is actually today's biggest mover. Let's start with the standout story of the day, which is IT, which is actually best performing sector, up by 4.49%, and this is the biggest deal because remember just yesterday IT was the worst performer, we all know, and which was down by 2%. This is a sharp reversal. And what you guys think it's happening is the Nifty IT index has actually fallen close to 5-year-old low after four straight session of losses. So today's move in being read as a bound back after the sector got heavily oversold. Some of it got like genuine bargain hunting, and some of it likely short over covering. So which actually where traders who had been against IT stocks are now buying back to close to their positions. So there is also a company specified trigger at Infosys annual general meeting in the late June last month. Chairman Nandan Nilekhani made comments pushing back on fears that AI will replace IT services company. He said that AI will amplify the industry instead, and that Infosys is targeting $400 billion AI for services opportunity by 2030. The kind of commentary seems to have a given confidence back to investors in the sector. So yeah, one caution here is Asian tech and semiconductor stocks are like very actually weak overnight with Korean chip stocks like SK, Hynix and Samsung under real pressure now. So this IT rally in the Indian stocks more like a domestic Indian specific bounce rather than a global tech rally. So three stocks in the IT sector are one is Infosys and the HCL, also the TCS. Infosys is biggest gainer around 5%, and HCL is about 4%, and TCS is around 3%, also trading in a similar range as India's highest and largest IT company by market. So the second one is Nifty MS IT Tech with 2.24% of increase. Second best performer today is the mid and small cap IT, and also the tech index up to 2.24%. So this is basically the smaller, less stock, more cousin of the main IT rally, and it makes sense that it's moving good. So because when the big boys like Infosys, TCS, and money usually rotates in the smaller IT names as well. So looking for the next leg of the recovery. One is persistent systems and emphasis and Coforge. Uh, so for persistent systems is like benefiting directly from the sector-wide bonds, and emphasis is like oversold bonds theme as the large caps, and Coforge is another key mid cap, which is a key mid cap IT name that tends to move with in the sympathy with the broader tech recovery trade. So basically, today's story is that big IT led to charge, and the mid cap IT pack followed right behind it. So if you're tracking this theme, just keep an eye on whether this broads over the next few sessions, fitted by end of the day. And the next one is Nifty Realty with the 1.25%. This was goes up to 1.25%. The sector has actually been strong for 2 days running now, and it was the top gainer yesterday up to 3.58%. So this is a continuing a trend, not just one by one flash. So there is a broader narrative here around the expectations of easing interest down in the line. So which is always positive for real estate because low borrowing costs help both the developers and home buyers. So there is also a continued optimism around the festive season and also the monsoons linked around housing demand picking up the second half of the whole year. So one is DLF, Prestige Estates, and Godrej Properties. And DLF is it is actually India's largest listed real estate developer, typically the bellwether for this entire sector. So this one's been considered consistent OI movers top two. So remember it showed up in our open interest and list earlier with 6.61% jump. So both price and positioning data are like confirming good strength here. So Godrej Properties, another major developer that tends to track sector sentiment closely. So especially on the days when the broader reality theme is in favor. So these all the top performers, top three performers, which are on the top today, and we'll talk about the bottom performers by sectors. One is Nifty PSU Bank. Basically, it's flat by 0.05%. This is actually notable because PSU banks had actually been one of the yesterday's stronger themes. We already read yesterday and we already discussed yesterday. So with all this excitement and money flowing into the IT, it looks like some rotation is happening. So traders are booking a bit profit in the PSU names that ran up recently. So PSU banks are also trading mixed today rather than just uniformly higher, with explains the near flat index number. One is State Bank of India, the largest PSU bank, and notably it's been eyeing the psychologically important of 1050 level. So watching whether it's breakthrough stall here. And Bank of Baroda, it's 4.272% of jump yesterday. So positioning is still active even if its today's price move is muted. And the next one is Punjab National Bank, another major PSU. Lender that typically moves in the sector index. Also the Nifty Media, which is actually second weakest today, up by 0.08%. It's been structurally difficult one for actually while now. So advertising revenue pressures, subscriber tends in broadcasting and increasing competition from digital to OTT platforms have been kept in the sector. So on the day when the excitement is all about the IT and realty, media is just isn't getting the same fresh money. Three stocks you should keep here is one is G Entertainment and Sun TV, also PVR Inox. Uh, G Entertainment is one of the largest listed media companies, as we know, and one of the often the most watched name for sector sentiment. And Sun TV is a key South focused broadcaster, tends to be more stable, almost also on range bound. PVR is the multiplex cinema exhibition player and sensitive to box office performance, and also footfall trends rather than just broader market themes. The third stock, third sector which is underperforming is Nifty MS Fin Services, which is up by 0.22%. Again, not negative, just lagging, likely because today's flows are heavily concentrated into IT and realty. So, leaving the smaller financial services names on the sidelines just for now. The three stocks here are one is Cholamandalam Investment and Finance, one of the largest NBFCs in the whole space now. Usually a bellwether for the mid cap finances, and Credit Access Grameen, microfinance focused NBFC, more sensitive to rural credit demand and also asset quality trends. And the third one is Poonawalla FinCorp, a diversified NBFC that tends to track broader risk appetite to the mid cap finance spaces. So here's the clean takeaway on the sectors today. IT is the story of the day and sharp bounce back after buying deeply also, which is led by Infosys and HCL, also the TCS with a mid cap IT pack. So reality continues its 2 day strength on the rate cup hopes. On the flip side, PSU banks, media, mid small financial services are today's laggards, and which are not falling, just not getting the fresh money that IT and reality are pulling in. So keep watching whether this is a genuine rotation or just one day pause before PSA banks and financial comes back into focus. So the first, yeah, I'll be giving you the summary now. First outperformer is Nifty IT with 4.49% of move. Key stocks are Infosys, HCL, Tech, and TCS. Uh, Outperformer number two is Nifty MSIT Tech, which is 2.24%. Persistent emphasis and Coforge are here. And Nifty Realty of 1.25%, which are DLF, Prestige Estates, Godrej Properties, and underperformer is one is Nifty PSU Bank with 0.04%, which are SBI, Bank of Baroda, PNB, and second one is Nifty Media with 0.08%, Z, Sun TV, PVR Inox, and third one is Nifty MS Fin Services with 0.22%, which I mentioned Cholamandalam, Credit Access Grameen, and Poonawalla FinCorp. So these are the heat map and the stocks which are doing good and the stocks which are underperformers by the sectorial wise. Uh, yeah, that's the. Also, we have discussed the news which have impacted the particular stock. So we'll be back with the new updates and the movements. Hi guys, I just wanted to let you know that if you guys have taken any trade or any positions, or if you are holding any positions, just let me know in the comment section. We'll together analyze the stock and we'll put the chart in the screen and we'll analyze it together with our tool. That's it. So we already analyzed we had already talk about and the brief about open interest and also heat maps. So just let me know which and all topics you want to discuss further. We can put that in the comments so that we can discuss it together. Hi guys, welcome back again. So we'll be discussing the midday market newses and also some updated commodity newses. Let's just shift focus now to sector performance for the day, which is 2nd July. I've picked up Yeah, I picked up some few important commodity updates. So everything I'm telling you is based on the live market data and public news report. So this is for the information purpose only, not just investment advice. So this segment is going to be a fast paced. So we're just covering the commodity prices and hottest trending stocks of the day. So you should keep your eye on the screen now because a lot of the things are moving right now. Yeah, GIF Nifty. This morning was indicating around 24,146, and that's a gap up of roughly 140 points over yesterday's stock close 24,005.85. So the setup was bullish right from the pre-market itself. Global cues were mixed though. The Nasdaq closed down 0.65% overnight on a sharp semiconductor and chipmaker sell-off. So while the Dow Jones stayed flat with the defensive bias stepping into there. So Wall Street was cautious on tech, but that didn't stop IT Indian IT from ripping higher today. It just tells you domestic sentiment is currently driving its own story. So yeah, let's just get into commodities also. Gold, silver, crude oil, and fuel prices. This is the stuff actually that affects everyone, not just like traders. Gold right now is 22 carat gold is trading around 12,904 per gram. If you're tracking 24 carat, that works out roughly 14,000 plus per gram. Gold has been a bit soft recently, largely because of the dollar strength and expectations around the US Federal Reserve rate path. When the dollar is strong and rate cutouts fade, gold tends to lose some shine because it becomes relatively more expensive for global buyers and less attractive for interesting bearing assets. The silver is trading approximately near 2,40,100 per kilogram.
So we'll just update the calls that we gave today. So the first call was on TCS stock. So we gave a call to buy 2000 call option. So the entry price was around 91 to 92, which was given at 929. So the entry price was around 91 to 92. So yeah, here we got the entry, and the targets were 97, 102, and 128. So the price reached two targets and made a high of 108. So this was the first call on stock option, and the second call on stock option was persistent stock. So we had given a call to buy 4,500 call option. So it was the entry was at 9:59 a.m. and the entry price was at 208 to 210. So the targets were 215, 224, and 248. So we achieved both the targets, and it is close to currently it is trading at 231, and our final target was 248. So it has made high till 240. So we have reached two targets, and the price made high of 240. So in index, we gave 50 or 23,800 call option 917. So the entry price was at 350, 350 to 355, and the target was 370, 380, and 438. So it reached two targets and made a high of 408. So this was the first call on index, and second was yeah, the second one was 23. First one was 23,800, and Second one was just a minute. Second one was 23,850. So the entry price was at 310. Target was 330, 340, and 392. So the price reached two targets and it made a high of 366. So we achieved two targets here. So this was the two calls on index and stock options. Two calls in stock reached their targets, and two calls in Nifty reached their targets.
So yeah, guys, that's it for today. Thank you so much for attending. Tomorrow at the same time, 9:15, will be coming live. Attend your live. So yeah, good luck with your trade. If you have if you have taken a trade, or if you already exited that position, or if you are in the good place, glad, and good luck for your positions. If you have taken any future trade or positions for tomorrow, good luck with that. So tomorrow at the same time, just join our live. And for the live more good updates, just subscribe our channel, and you can click the bell icon for immediate and quick updates. You also, there is a link in our chat box and also in the description. You just go through it and contact us anytime. We'll be uh, giving you a quick demo about our tool. And also you can check out our website also. There are a lot of things you need to explore in our website. So go through the website and come back tomorrow. Have a good day.